Wall Street initially shot higher after the Federal Reserve decided to hold interest rates steady on Wednesday. But stocks shed their gains as investors remain concerned about worsening trade relations between the U.S. and China. Exponential ETF's capital markets director, Josh Bleckman.
There was a wide-held belief that they were going to keep rates unchanged, which they did, of course. You can see that the market did have a little bit of apprehension, as evidenced by the fact that it jumped up afterwards. But really, on the scale of that bump higher was not too large. And I think it's a reflection of the market pretty much just being assured of what they already thought was going to happen.
Tesla shares rose after the bell. The electric car maker said its production target for its mass market vehicle, the Model 3, remains on track. Pulling up the S&P 500, Apple. It sold more iPhones in the latest quarter and promised $100 billion in additional stock buybacks. Apple's results lifted shares of its suppliers such as Cirrus Logic and Skyworks Solutions. MasterCard shares charged ahead. Higher consumer spending on credit and debit cards drove profit and revenue sharply higher. Snap shares sank to an all-time low. A number of analysts slashed their price targets. The owner of the Snapchat app missed estimates for growing its user base. Private employers added more to their payrolls than expected in April, but it was the smallest increase since November. In Europe, materials and consumer cyclical stocks led a broad-based rally that lifted the markets.